Preparing for a financial center manager at Bank of America interview. You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you want to be a financial center manager at Bank of America. My background is in leading customer-facing teams where performance, coaching, and controls all matter. I'm interested in the financial center manager role because it combines people leadership with local market growth. At Bank of America, I'd focus on helping clients improve their financial lives, coaching teammates to identify needs, and running a disciplined center with strong compliance. That mix of sales leadership, service, and operational accountability fits how I like to lead. While answering, connect your leadership background to branch performance, client experience, risk discipline, and Bank of America's focus on responsible growth, financial wellness, and relationship-based banking. Question 2. How would you define success for a Bank of America financial center manager? Success is not just hitting production numbers. A strong financial center manager grows client relationships while protecting the franchise. I'd measure success through client experience scores, team engagement, retention, operational soundness, digital migration, and responsible referrals to Merrill, lending, and small business partners. If clients trust the center, associates feel coached, and audit results are clean, sustainable revenue usually follows. Make sure to cover balanced performance, client satisfaction, employee engagement, deposit and relationship growth, digital adoption, operational controls, referrals to specialists, and risk management, without overemphasizing sales alone. Question 3. Describe your leadership style when managing a financial center team. My leadership style is direct, coaching-oriented, and metrics-driven. I like setting clear weekly priorities, observing real client interactions, and giving timely feedback instead of waiting for formal reviews. I also believe recognition matters. People repeat behaviors that are noticed. When performance slips, I diagnose whether the issue is skill, will, process, or confidence, then coach accordingly. The goal is a team that feels supported, but clearly accountable. In your answer, talk about setting clear expectations, coaching in the moment, using metrics constructively, recognizing performance, addressing gaps quickly, and building an inclusive, accountable team culture. Question 4. How would you coach a banker who is not meeting sales or referral goals? I'd start by understanding the gap. Is the banker not seeing enough clients, missing discovery questions, lacking product knowledge, or uncomfortable asking for the next step? Then I'd review activity data, observe conversations, and role-play specific scenarios. I would agree on a short action plan with measurable behaviors, not just a revenue target. The coaching has to reinforce needs-based recommendations, because strong results at Bank of America must be responsible and sustainable. Be sure to mention diagnosing root causes, reviewing activity metrics, role-playing conversations, observing client interactions, creating a short action plan, and ensuring recommendations remain needs-based and compliant. Question 5. Give an example of how you improved customer experience in a previous role. In one role, customer wait times were creating frustration and poor survey comments. I reviewed traffic patterns, moved stronger employees to peak windows, and created a triage approach so simple requests were handled quickly while complex needs were scheduled. I also coached the team on acknowledging every client within seconds. Within 2 months, complaints dropped and satisfaction scores improved. The lesson was that client experience comes from both process design and employee behavior. While answering, use a clear STAR structure, quantify the service issue where possible, explain actions taken, and connect the result to loyalty, referrals, lower complaints, or better operational execution. Question 6. How would you handle an angry client who feels the bank made an error? I'd first lower the temperature by listening without interrupting and acknowledging the client's frustration. Then I'd move into facts: what happened, when, what documentation exists, and whether any immediate risk needs attention. I would not promise an outcome before verifying policy and system records. I'd set a clear follow-up timeline, document the interaction, and involve the right escalation partners if needed. Clients may dislike an answer, but they respect ownership and transparency. Make sure to cover empathy, de-escalation, ownership, fact-finding, documentation, policy adherence, timely follow-up, and knowing when to involve operations, fraud, escalation teams, or senior leadership. Question 7. What does responsible growth mean in a financial center environment? Responsible growth means expanding relationships in a way that is good for the client, the team, and the bank. In a financial center, that means strong discovery, appropriate recommendations, accurate disclosures, and no-pressure tactics. For example, if a client needs cash flow help, the right answer may be budgeting tools, a savings plan, or a specialist referral, not simply another product. Growth only has value when trust and controls remain intact. In your answer, explain that growth must be client-centered, risk-controlled, compliant, sustainable, and aligned with the client's actual needs, rather than aggressive product pushing or short-term sales. Question 8. How would you drive digital adoption among Bank of America clients? Digital adoption works best when it solves a real client problem. I'd coach associates to demonstrate mobile deposit, Zelle, alerts, card controls, appointment scheduling, and budgeting tools during relevant conversations. For example, if a client frequently visits to check balances, showing alerts and the mobile app creates immediate value. The branch still matters, but digital tools free the team to spend more time on advice, complex needs, and deeper relationships. Be sure to mention educating clients on mobile and online banking, matching tools to client needs, reducing routine transactions, improving convenience, and training associates to demonstrate features confidently. Question 9. How do you balance sales goals with compliance and risk management? I view compliance as the boundary that makes performance sustainable. Sales goals are important, but they must come from proper discovery, accurate information, and suitable recommendations. As a manager, I would inspect behaviors, how associates open conversations, explain options, document interactions, and handle exceptions. If results look strong, but behaviors are weak, that is a risk signal. The best teams produce consistently because they combine client focus with disciplined controls. While answering, stress that compliance is non-negotiable. Sales must be needs-based, documentation and disclosures matter, and managers should inspect behaviors, not just end results. Question 10. Tell me about a time you had to address an employee performance issue. I once managed an employee who was consistently missing service standards and affecting team morale. I met privately, shared specific examples, and asked for their view before jumping to conclusions. We created a 30-day plan with daily check-ins, role play, and clear expectations. I documented progress and gave honest feedback. Their performance improved enough to regain client confidence, and the team saw that I was fair but serious about standards. Make sure to use STAR. Describe the performance gap objectively, explain coaching and documentation, show fairness and urgency, and highlight the business or team outcome. Question 11. How would you partner with Merrill, mortgage, small business, and other specialists? Specialist partnerships should feel seamless to the client. I'd train the team to identify signals, investment assets, home ownership plans, business cash flow, credit needs, or retirement questions. Then we would make warm introductions with context, not just hand out a name. I'd also review follow-through with partners so clients are contacted promptly. Done well, referrals deepen trust because the financial center becomes a gateway to the full Bank of America relationship. In your answer, talk about identifying client needs, making warm handoffs, preparing context for specialists, tracking follow-through, and avoiding referrals that are random or purely quota-driven. Question 12. What would you do in your first 90 days as a financial center manager? In the first 30 days, I'd listen and assess team strengths, client traffic, market demographics, partner relationships, audit history, and performance trends. By day 60, I'd identify the biggest opportunities, whether they involve coaching, scheduling, service flow, referrals, or digital education. By day 90, I'd have a simple operating rhythm, daily huddles, weekly coaching, partner check-ins, and clear scorecard reviews. I'd avoid changing everything before understanding the center. Be sure to structure your answer around learning the market, assessing talent, reviewing metrics, meeting partners, understanding controls, observing client interactions, and building a focused execution plan. Question 13. How do you motivate a team during a difficult sales month? When results are behind, the manager sets the tone. I'd avoid panic and refocus the team on controllable behaviors, quality conversations, follow-up calls, appointment setting, digital demonstrations, and partner introductions. I'd break the month into smaller goals and recognize progress quickly. I would also review what is blocking performance, such as staffing, confidence, or unclear priorities. Pressure is normal, but clients should never feel the team is chasing numbers. While answering, focus on controllable behaviors, morale, transparent communication, micro goals, coaching, recognition, and avoiding panic-driven tactics that could harm client trust or compliance. Question 14. How would you manage operational risk in a busy financial center? Operational risk increases when a center is busy and people take shortcuts. I'd rely on routines, opening and closing checklists, cash control reviews, dual control discipline, exception tracking, and regular spot checks. I'd also use huddles to reinforce fraud alerts, account opening standards, and documentation expectations. The key is making controls part of daily rhythm, not something remembered before an audit. Good operations protect clients, employees, and the bank. Make sure to cover cash controls, dual control, account opening accuracy, fraud awareness, exception handling, audit readiness, employee training, and creating routines that prevent mistakes under pressure. Question 15. Describe a time you used data or metrics to improve team performance. In a prior role, overall results looked flat, but the data showed the issue was not traffic. It was conversion after initial conversations. I reviewed appointment rates, follow-up activity, and product knowledge gaps. We changed the coaching focus from general selling to better discovery and next step setting. I also added weekly pipeline reviews. Within several weeks, the team improved conversion because we were solving the real problem instead of blaming market conditions. In your answer, mention which metrics you reviewed, how you found the performance driver, what actions you took, and how you measured improvement afterward. Question 16. How would you handle suspected fraud or suspicious activity at the financial center? I would follow procedure immediately and avoid improvising. If something appears suspicious, the priority is protecting the client, employees, and the bank while documenting objective facts. I would involve the appropriate fraud, risk, or security channels based on policy and avoid confronting or tipping off the individual in a way that creates risk. I'd also debrief the team afterward, if appropriate, so they recognize warning signs and know the correct escalation path. Be sure to mention staying calm, protecting the client and bank, following Bank of America procedures, escalating through proper channels, documenting facts, and not tipping off suspicious parties. Question 17. How do you build trust with clients in a local market? Trust is built through consistency. Clients remember whether we follow up, explain things clearly, and treat them like people rather than transactions. I'd encourage the team to know local client needs, support financial education, and maintain strong community visibility. Inside the center, I'd emphasize warm greetings, accurate information, and proactive check-ins. Over time, that turns the branch from a place clients visit only for problems into a relationship they value. While answering, discuss consistency, community presence, financial education, follow-up, transparent communication, knowing local demographics, and positioning the financial center as an advice-oriented relationship hub. Question 18. How would you create an inclusive culture in your financial center? An inclusive culture starts with everyday behavior, not slogans. I'd make sure every associate has access to coaching, feedback, development opportunities, and a voice in team discussions. I'd also watch for subtle issues like the same people always getting preferred schedules or high-value opportunities. For clients, Inclusion means serving people respectfully across backgrounds, languages, ages, and financial situations. A team that feels respected is more likely to create that same feeling for clients. Make sure to cover respect, psychological safety, coaching access, fair scheduling, listening to different perspectives, inclusive client service, and linking diversity to stronger decision-making and community connection. Question 19. Tell me about a time you had to manage competing priorities under pressure. In a busy period, I once had staffing shortages, customer escalations, and end-of-day operational deadlines happening at the same time. I prioritized anything involving risk or client impact first, delegated routine tasks to capable team members, and communicated wait times clearly. I also paused non-essential activities until service stabilized. Afterward, I reviewed what caused the pressure and adjusted scheduling. Under pressure, the manager's job is to create order and keep standards intact. In your answer, use a concrete example. Explain how you prioritized risk, clients, people, and business needs, and show calm communication, delegation, and follow-through. Question 20. Why should Bank of America hire you as a financial center manager? Bank of America should hire me because I bring the combination this role requires: leadership, client focus, performance discipline, and respect for risk. I know how to coach teams, use metrics, improve service, and create accountability without losing trust. I would lead the financial center as both a business and a client relationship hub. My goal would be consistent growth, engaged employees, strong controls, and clients who feel confident bringing more of their financial life to the bank. Be sure to summarize your leadership fit: client-first mindset, ability to coach performance, comfort with controls, local market awareness, and alignment with Bank of America's responsible growth approach. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.